Well, hello, America. My name is Glenn, and I'm a recovering alcoholic. I am not an economist. Yes, I know that comes as a surprise, but I am a thinker, and I think you are too. So I don't want to talk to you tonight about the ins and outs of macroeconomics, because I think we'll both put a gun to our head. I want to talk to you about something really simple, good old-fashioned run on the bank. You've probably seen video like this before. Here's Northern Rock. Something causes a panic. People line outside the bank to get the money out. I mean, I saw this in the Jimmy Stewart movie. Remember that in It's a Wonderful Life? They hoard it all, and then they stash it under their mattresses because they're afraid of what's coming next. Well, in last night's Real Story segment, I argued that the historic rescue of Bear Stearns by our government was to prevent not just a classic run on the bank like that, but a complete meltdown of our financial system, and you never heard about any of it. Well, now look who agrees. A little paper called the Wall Street Journal. I want to show you the front page today of the Wall Street Journal. Here's an article called 10 Days That Changed Capitalism. It starts, quote, "The past 10 days will be remembered as the time the U.S. government discarded a half-century of rules to save American financial capitalism from collapse." Not just a company or an industry, but our entire capitalist system. So if I'm in crazy town, I guess the Wall Street Journal is the mayor. So here's the point tonight. In trying to prevent a run on our banks, our government has actually triggered one. And here's how I got there. Lost in all of the news about the Bear bailout was something else our government announced that weekend, that they were opening up something called the discount window. This is something where banks can go and get money, and they open it up to institutions who never had access to it before. Just like your teller window at your bank, the discount window lets banks pull up and take out a whole pile of cash from the Fed. It's exactly what they've been doing. Just in an orderly fashion, but they've been running on the Fed, stocking up on cash, and then, just like a panicked investor, stuffing it under their mattress. How do I know? Well, let me just show you some of the evidence here. There's supposedly plenty of cash in the market, right? Where is it all? The buyout of Clear Channel Communications collapsed because the banks didn't want to lend $19 billion that they promised. Home equity loans are getting harder and harder to obtain or refinance because banks don't want the risk. In fact, they want their money back from you. Student loans are drying up. Try to get a loan next year at some banks. And now, according to the Financial Times, banks are, quote, hoarding cash, which is a fancy way of saying they're putting it under their mattress. The banks have run on the Fed. So tonight, here's what you need to know. The underlying problems that triggered this crisis haven't gone away. And that leaves us with three possible paths to follow, as I see it. But remember, one, things get worse. Another domino falls, a hedge fund falls, something falls, and we start a meltdown faster than the meltdowns that Mel Gibson has during a DUI stop. Option two, things get worse and the government tries to stop the panic by Bear Stearning, i.e. socializing, nationalizing everything they can get their hands on. Or option three, everybody just stays calm, walks slowly to the exits, and eventually we're all fine. I choose option number three, but somehow I think our government has option two in mind. Bob O'Brien is the stocks editor at Barron's Online, and John Tamney is the editor of Real Clear Markets and the senior economist with Wainwright Economics. Let me go to John first. Run on the bank or no run on the bank when it comes to the Fed?
I think it's a big shame. I think failure is the ultimate teacher, and the problem with the Fed trying to bail out all manner of institutions and the federal government trying to do the same thing is that it does not allow people to learn the lessons that caused them to fail to begin with, which ensures more of these mistakes in the future, and it also robs them of the lessons that tell them how to go about their business properly. The federal government involvement is just going to make things worse.
Okay. Bob, if you listen to John's answer there, I think you heard that he didn't answer my question, which is this usually means you disagree with me. Bob, let me ask you, are the banks running on their bank, the Fed?
Yeah, you bet. Glenn, they've already done it. As soon as the Fed opened these windows to financing to some of the non-bank banks that are out there, the Goldman Sachs, the Lehman Brothers of the world, all of a sudden they went, tapped on the window, and got $31 billion over the course of the first 48 hours. that these windows were open. So not only was there a run on the bank, there was a run on the bank as soon as the guard unlocked the front door. It's taken place. It's going to continue to take place, and we're going to see more of these opportunities for these banks, as well as some of the broker-dealers that aren't actually technically banks, take place as the Fed gets even more unconstrained in its lending practices.
So, John, I think we're on our way to nationalizing all this debt, and we're making the same mistakes that we made in the Great Depression. We are putting the same restrictions. I mean, it's almost textbook the same stuff that we're doing in some ways.
Isn't it remarkable to read about all this? What we keep hearing is that they're trying to do some of the same things that they did during the Great Depression. And as you and I have discussed on this show before, well, that was a 10-year slowdown where unemployment never fell for the most part for the 10 years. So why would we want to do the same things that kept the economy from recovering yet again? Yet that's what the federal government's trying to do. So it's going to take what should have been a minor correction and it wants to turn it into something much, much worse.
Bob, help me work this out. As I see, and again, I'm not an economist, I don't do what you guys do. As I see the Fed, they have a valve, and they can open it up, and they can make money easier to get or harder to get. As they open up the valve, the value of the dollar goes down, and the way they make it easier, they open up that valve by making interest rates lower. Okay, so at some point, they're going to open up that valve, and it'll be at the very end, and it's not going to affect the market. At that point, isn't that when they immediately go, oh crap, and try to shut the valve or slow it down shut it down as much as they can, because they'll know we've dumped too much money out there, and now we can't affect anything. Is that right or wrong?
Well, ultimately, Glenn, but I think what's going to happen before then is that the Fed is going to be well behind the curve here. I mean, there's a phrase that's pretty familiar to investors on Wall Street, the Fed pushing on a string, meaning you push on the bottom end of the string. The top end doesn't move. The Fed's clearly doing that right now. They're behind the curve. They fail to recognize some of the problems that are that have been in the marketplace throughout the evolution of this disaster that we've seen recently. I don't think the Fed's thinking is going to change. I don't think they're going to suddenly leap ahead of the curve, realize when it's just a little too late, and suddenly shut off the spigots. I think they're going to wait much too long before they get there.
And then, John, what happens if they don't if they're behind the curve like that? What happens to the economy? Inflation goes up, right?
Inflation's already there with us. It's been with us for years, and I think that's why we have this problem today. The Fed is diagnosing, it's trying to fix the wrong thing. The problem we've had since 2001 is the dollar's been in a steady free fall since then, and invariably it leads to these kinds of economic distortions and investment mismatches that put us in these kinds of situations. The Fed does not understand what ails this economy, and it's pretty scary.
Okay, so what's coming next? I mean, the headline was pretty frightening today. 10 days that changed capitalism. And yet nobody on Main Street really knows what's going on. I don't think anybody, even on Wall Street, really understands the consequences of this. So what's next, and how long before the next shoe falls?
Well, Glenn, I think there are some people on Wall Street who do understand the consequences of this. Those are the traders that circulated those rumors that Bear Stearns was on the brink of bankruptcy, who took short positions in Bear Stearns stock, who bought put options on Bear Stearns, and cashed out to a mighty fortune. So there were some people out there who knew exactly what was going on, understood the consequences of what they were doing. Now, whether those things are favorable to ma and pa who are trying to live on their annuity is another question altogether. But some folks,
how does the average folk? I mean, this is what I said on the radio show today. There's been a run on the bank, and the only one that doesn't have their money is you at this point. The average person doesn't have their money. So what does the average person do?
Cry.
Bob, no, look, you're banned from the show for 2 days for that. I mean, give me some hope. John, give me some hope, man.
I'm often laughed at for saying this. I think the fact that if they can stay in their homes, housing is one of the most defensive assets you can have. And everyone's talking about a big collapse, but it hasn't collapsed nearly as much as equities amidst all this.
All right. Thanks a lot, guys.